$10 million or a pipeline of the best investment opportunities in the world. Which would you choose? Most people grab the money without thinking twice. But after 10 years in this business, I can tell you they'd be making a massive mistake. Money, that's everywhere. Just look around. We're living in a world flush with capital. Private equity firms are sitting on billions in dry powder. Family offices have more cash than they know what to do with. But you know what actually is rare? Access to deals that move the needle. I learned this lesson the hard way. After having my first successful exit as an entrepreneur, I thought I had it all figured out. The perfect strategy, solid capital backing, and endless ambition. But I kept running into the same wall. Every great deal I heard about, I was finding out months too late, after all the real money had been already made. Let me paint you a picture of what I mean. A few years back, on one of the biggest real estate opportunities let me paint you a picture of what I mean. A few years back, one of the biggest real estate opportunities close to Stanford University was changing hands. A prime development project, best in class sponsor, the whole package. I had the capital ready to go, but I never had the chance to bid. Why? Because that deal was locked up through private network before anyone knew about or even existed. That's when it hit. Success in investing isn't just about having money or being smart. It's about seeing opportunities for everyone else. The truly wealthy, they're not rich because they're better at analyzing deals. They're rich because they see deals nobody else gets to see. This realization completely changed my approach to investing. Instead of just focusing on capital and strategy, I started building something much more valuable, a system for accessing opportunities. That's why I founded Infinity⁹, to create a platform where serious investors could access institutional grade deals that they never else would see. Now, when most people hear deal flow, they just think it's about having lots of options. But that's missing the point entirely. True deal flow is about having the right options, deals that are pre-vetted, strategically sound, and aligned with your goals. Here's what this looked like in practice. My first real breakthrough came with a small 42-unit value-add project in St. Louis. Instead of just trying to invest, I spent weeks researching the local market. I learned everything about the area, from traffic patterns to upcoming development plans. So when I finally got to meet with a sponsor, I wasn't just another investor with money. I brought insights they hadn't even considered. That first deal, it wasn't a huge check, but it was hugely profitable. More importantly, it got me invited to the next deal and the next. Each time, I wasn't just investing, I was adding value, analyzing markets, making connections, solving problems. Suddenly, I wasn't chasing deals anymore. They were coming to me. This shift completely changed the game. Within 2 years, we went from struggling to see good deals to having our pick of opportunities. But more importantly, we learned something crucial about deal flow. It's not about being everywhere. It's about being valuable whenever you are. Through this journey, I discovered that real deal flow stands on three pillars. Miss any of them, and the whole structure becomes shaky. First pillar is expertise, not just general knowledge, but deep, specific insights into your chosen market. When we started Infinity⁹, we didn't try to be everything to everyone. We focused exclusively on value add real estate opportunities where we could actually move the needle. Take our recent investment in Orlando. While everyone was fighting over downtown properties, we spotted an opportunity in an overlooked suburb. Why? Because our data showed a major demographic shift in this particular suburb, and due to new companies moving their offices there. That's the kind of insight that turns good deals into great ones. But expertise alone isn't enough. The second pillar is what I call strategic relationships. Notice I didn't say just relationships. There's a crucial difference. Most people think networking means collecting business cards at conferences or perhaps even racking up LinkedIn connections. That's not what I'm talking about. Strategic relationships are about becoming genuinely valuable to select group of partners who align with your goals. We spent 3 years building a relationship with one of the top developers in Nevada. We started small, sharing market research, making introductions, adding value however we could. And today, they bring us their deals before anyone else because they know we understand their business and we can move quickly when we're needed. The third pillar might surprise you. It's systems. Because here's the truth about deal flow. You can't scale it if you can't systematize it. At Infinity⁹, we've built a complete ecosystem for evaluating and managing opportunities. Every deal goes through the same rigorous process: market analysis, sponsor evaluation, risk assessment. It's not sexy, but it's what allows us to move quickly when the right opportunity appears. Drop a comment, Real Estate Diamond, and I'll create a video about this soon. Now, this is where things get really interesting because deal flow isn't static. It's evolving faster than ever. The tools and technology available today are completely transforming how opportunities are discovered and assessed. Just last month, we used AI-powered analytics to identify a market trend that nobody else was seeing. More importantly, we are able to aggregate our confidential proprietary information to make better analysis of the opportunities that we see. Traditional metrics showed a struggling retail corridor, but our data revealed something different: a perfect storm of a demographic shift and infrastructure improvements that spelled opportunity. But here's what fascinates me about all these technological advances: they haven't replaced the human element of deal flow. If anything, they've made relationships even more crucial because now that everyone has access to pretty much the same data, what sets you apart is how you use it. Let me show you how one of our investors transformed his approach by partnering with us at Infinity⁹. He came to us with a challenge many investors face. He had the capital, he had the knowledge, but he couldn't break into the types of deals that would truly level up his portfolio. He felt stuck, limited to market and opportunities that were just within his reach and comfort zone and his country. Does this sound familiar? That's where we came in. By partnering with us, he didn't just expand his reach, he redefined how he invested. We helped him allocate his capital to places he'd never considered before, markets and assets with institutional grade quality. No more worrying about the sticks and bricks of individual properties. Instead, he focused on strategy, the big picture moves that diversified his portfolio and positioned him for more sustainable long-term growth. Here's how we made it happen. Step one: leverage our expertise and access. Our deep connections and insider knowledge gave him access to high-quality deals, opportunities that most independent investors never see. Think institutional level assets, not your typical fix and flips or single family rentals. These were either stabilized properties or co-GP positions in value add properties where the LP was an institution like Blackstone or Carlyle. He diversified across sectors and geographies, minimizing risk while maximizing the potential of his returns. Step two was to focus on strategy, not execution. Instead of spending his time managing individual properties or hunting for deals, he let us handle the heavy lifting. Our team brought him pre-vetted opportunities that aligned with his goals. This freed him up to do what he does best. Think, and more importantly, think strategically about his financial future. And step three, build a diversified, high income or high performing portfolio. By working together, he allocated his capital across a range of asset classes and markets he'd never tapped into before: retail, industrial, multifamily, you name it. And the best part, these assets were already performing, reducing the volatility that can come with traditional real estate investing. The outcome? He went from being stuck in a narrow lane of investing to owning a diversified portfolio of institutional quality assets. No more chasing deals or managing tenants. Now he has a system, a deal flow machine, powered by partnership. And the returns? Over 20% per year. Let's just say that he's sleeping a lot better at night. Let's talk about where deal flow is headed, because the way opportunities are sourced and executed is evolving at lightning speed. For investors who understand these shifts, the future holds incredible potential. I am particularly excited about two trends. Trend number one is the power of data-driven insights. Data is the new currency of deal flow. Today, investors who leverage AI and predictive analytics are gaining an unparalleled edge by spotting opportunities before they hit the mainstream. At Infinity⁹, we've made significant investments in cutting-edge technology to analyze a market at a granular level. By using AI-driven models, we've been able to pinpoint high-growth US real estate markets well before the crowd catches on. For example, our tools recently identified emerging opportunities in mid-sized cities experiencing population booms. These aren't just guesses. They're data-backed insights that helped our investors stay ahead of the curve. And the second trend is a globalized investment landscape. The world of real estate investing is no longer confined by borders. Today, investors can access opportunities globally, breaking down these barriers between domestic and international markets. This is a trend I'm particularly excited about. When I started Infinity⁹, my vision was to connect international investors with US markets. Now we're seeing a surge in cross-border investments as investors diversify to hedge against localized risks. Imagine owning a portfolio that spans premium developments in Miami, logistics centers in Europe, and high-growth urban projects in Asia. That's not the future. It's happening right now. Dave Carey's King of Capital illustrates how private equity firms expanded globally to unlock new opportunities. That same principle applies to individual investors. Those who think globally are poised to access the next wave of transformative deal flow. At Infinity⁹, we're not just adapting these trends, we're leading with the charge. Our proprietary technology uncovers data-driven insights at our global network, bridges the gap between the markets. Now, I've painted a pretty exciting picture of what is possible with proper deal flow. But let's get real for a minute. Building this kind of system isn't always smooth sailing. I've hit every wall you can imagine, and I've learned some painful lessons along the way. My biggest wake-up call came about 3 years into building Infinity⁹. We were seeing plenty of deals, but something wasn't clicking. Our conversion rate was low, and we were burning too much time on opportunities that went nowhere. That's when I discovered what I call the credibility gap. We had the relationship to see deals, but we hadn't built enough trust for people to choose us as their preferred partner. Big difference. So we made a radical change. Instead of trying to be in every deal, we started focusing on becoming the absolute best at one specific type of transaction. The results were immediate. Our conversion rate tripled. Why? Because when you speak to someone's exact needs, they stop seeing you as just another option and start seeing you as their solution. Here's something fascinating about deal flow that nobody talks about. It's not actually about the deals. It's about understanding how decisions really get made in your market. Let me give you an example. We were trying to break into a new market, and I was getting frustrated because every good deal seemed to be locked up before even we heard about it. So I decided to do something different. Instead of chasing deals, I started interviewing people who were successfully closing them, not to get into their deals, just to understand their process. And I discovered something surprising. The best deals weren't going to the highest bidders or even the fastest movers. They were going to people who had reduced the sponsor's stress. That's it. They made the process easier, brought solutions instead of money or just money, and became known as reliable closers or had certainty of close, which we call it in the industry. This completely changed our approach. We started building our reputation around being the no drama partner. When we said we closed. When we spotted a potential issue, we brought a solution along with it. Within 6 months, we were getting calls about deals before they went to market. Not because we were the biggest or the richest, but because we understood what really mattered to our partners. This led us to develop what I call trust triggers, specific actions that consistently build credibility in your market. These aren't about making grand gestures. They're about being systematically reliable in ways that matter. Take our due diligence process. We created a standardized system that lets us give sponsors a clear yes or no within 5 days. Most investors take weeks to decide. This speed and clarity became one of our biggest advantages. We also started doing something unusual with our deal field feedback. Even when we passed on an opportunity, we'd send a detailed analysis explaining why. This took extra time, but it showed the sponsors that we respected their work and we thought deeply about their opportunity and project. All right, let's clear something up about investing. You've probably heard of top-down approach, right? It's what the big players like Blackstone use. They start looking at broad rising markets and they pepper in their investments across the board. And hey, that works when you have millions or billions to move around. But us at Infinity⁹, we do things a little bit differently. We take a bottom up approach. When a deal comes across our desk, we start at ground zero, analyzing the deal structure, digging deep into the property level, then zooming out to the submarket, and then finally to the larger market. This process ensures that we're locking in the best deals, not just following trends. And honestly, that's how we deliver consistent results for our investors. Now, I know not everyone has access to sophisticated data analytics, but here's something powerful I've learned. You don't need to start big. You can build your edge one piece at a time. Start with what you can easily track. Follow local business news religiously. Monitor building permits in your target areas. Track LinkedIn job postings for major employers and build relationships with local business owners. As you grow, you can layer in more sophisticated tools. But the key is to start with specific focus and build from there. One of our partners started just by tracking restaurant openings in 3 neighborhoods. That's it. But he understood something crucial. New restaurants, especially high-end ones, don't open randomly. They follow very specific demographic shifts. Within a year, he had identified two emerging corridors before they showed up on any broker's radar. He made three acquisitions at pre-growth prices. Today, those properties have doubled in value. This is where everything we've talked about comes together: the relationships, the data, the systems. Because the real power isn't in having one of those elements, it's how you can integrate them. When we spot a promising market through our analytics, we don't just start making offers. We activate our network. We talk to local operators who know the area. We connect with brokers who have deep market knowledge. Before we wrap up, let me share some of the expensive lessons I've learned. Because knowing what not to do is often more valuable than knowing what to do. Early on at Infinity⁹, we made a classic mistake. We tried to analyze everything, every market, every asset class, every deal type. We had data coming out of our ears, but we weren't getting any better results. The problem: we were a mile wide and an inch deep. When you're tracking everything, you're not really tracking anything. Success came when we narrowed our focus to specific markets and deal types that we could spot patterns that others missed. Here are the three biggest traps I see investors fall into. First, what I call data paralysis. They collect so much information that they never actually act. Remember, the goal of data isn't to eliminate risk, it's to understand which risks are worth taking. Second, ignoring qualitative signals. Numbers matter, but so does local knowledge. We once passed on a deal because the data looked perfect, but local operators were all pulling out of that market. Turns out they knew about a major employer leaving before it hit public data. And third, and this one is crucial, is try to automate relationships. Yes, use technology to identify opportunities, but never forget that real estate is still a relationship business. So let's get practical. I want to give you a specific plan you can start executing today to build your own deal flow machine. On your first week, build your tracking system. Pick three specific metrics in your target market. You could be job growth by sector, perhaps building permit trends, business license applications. Start tracking these weekly. Don't worry about fancy tools. A simple spreadsheet works fine to start. On the second week, identify your local experts. Find the top three brokers in your market, but don't pitch them. Study their recent deals, understand their patterns, and look for gaps in their coverage. Third week, start your outreach system. Set up Google alerts for your target areas and join local business groups. Connect with property managers and build your intelligence network. And in your fourth week, create action triggers. Define exactly what combinations of signals will make you move on a deal. Write them down. This removes the emotion of the decision making process. Let me leave you with a perspective on where this is all heading, because the next few years are going to transform how deals are found and executed. We're seeing the emergence of what I call predictive deal flow, using AI and machine learning to spot market movements before they're obvious. But here's the interesting part. This technology isn't replacing traditional deal flow. It's supercharging it. Just last month, our system flagged an unusual pattern: a 60% increase in remote work job postings combined with a spike in luxury car registrations in a secondary market. 2 weeks later, we learned about a major tech company planning a satellite office there. This is the future, combining technology with traditional relationships. And that deal flow see opportunities that others miss. The winners won't be the ones with the most data or the biggest networks. They'll be the ones with the best who combines both. Let me end with something personal. When I started this business, I was just the outsider looking in, frustrated by the lack of access to good deals. Today, we see more opportunities than we can act on. The biggest lesson I've learned: success in deal flow isn't about being the biggest or the richest. It's about being systematic, focused, and patient enough to build something sustainable. So here's my challenge to you: take one idea from this talk, just one, and implement it this week. Maybe it's starting to track those three metrics. Maybe it's building your local expert network. Maybe it's defining your action triggers. Because here's the truth: 6 months from now, you'll wish you had started today. The best opportunities don't go to the biggest players, they go to those who are the most prepared. And remember, every major player in this industry started exactly where you are now, ready to build something, but wondering where to begin. The only difference between them and everyone else: they started. Thank you for your time. Now get out there and start building your deal flow machine. The opportunities are waiting.